Hi, we are the Happy House Hunters, and we meet the first Tuesday of every month at 6 o'clock, and we're going through the 6 F's of real estate. So first we have to find it, then fund it, and then we can fix it, we can flip it, we can fill it, and finally, what is our freedom number? So tonight we're talking about how to fund it. And we have Fannie Mae West. And yes, folks, her name is Fannie Mae West, and she was meant for the mortgage business because not only does she have the name for the business, but she has the knowledge and the expertise as well. After going through the process of buying her first home, Fannie Mae felt as if she had found her niche. She began her extensive career in the real estate and mortgage industry. So Fannie, I want to ask you some great questions. Number one, I want to know how in the world did you finally decide to get into the mortgage industry after buying your first piece of real estate? What was it about the mortgage piece that intrigued you?
Well, it's funny because I tell everyone the story. I was a real estate agent and
Okay.
I was co-oping with a mortgage broker,
Uh-huh.
right? And I used to use my name huh, to help me sell real estate because people thought I had Fannie Mae properties and everything of that nature. And
Right.
he said, "You have the perfect name for the mortgage business. You ever thought about doing home loans?" And I said, I never thought about it, but I do. And I have a background in finance. I have my accounting degree
Okay.
and I love numbers and I love budgeting and everything of that nature. So it just seems like it made sense. And after I had my daughter in 2008,
Okay.
selling real estate, at 8 o'clock and 9 o'clock at night, being out showing homes wasn't conducive to my home life. So I switched to doing mortgages full time.
Okay. I get it. I love it. I love it. Now, you didn't start off with your own company. Give us a little bit of your background. Give us some of your history.
Well, my history, I started out, actually, the guy that I was doing the co-op, he said, "You have the perfect name for the business." I started working with him. He was a mortgage broker. And he was a
Okay.
very honest guy. And he showed me the ropes and everything. And I appreciate him to this day. So I started out mortgage brokering. And then from there, I've been in banking, retail. I've kind of seen a little bit of everything, but I still have a love for my investors. I invest in properties myself, you know what I mean? So I try to stay abreast of, the different things that goes on in the market as well. I'm basically it's for personal reasons as well as helping my clients. So
Okay. I love that. I love that. And is part of your presentation going to share with us how you started your own mortgage company, or can you talk about that before you started if it's part of your presentation, I'll wait.
no, it's not part of my presentation. I was just going over the different financing options. But what made me start my own mortgage brokerage, which is Aptis, I am so excited about it. I got everything licensed and I was up and running probably just like 2 months ago.
I
And
saw that. I was so happy
yes,
for you. I was so excited. I thought, oh my gosh, she's got her own mortgage company. How is that even possible? I wouldn't begin to know how to start my own mortgage company. I love that about you.
well, I had a lot of people with a lot of support, which I was so grateful for. It wasn't easy, but I said, why didn't I do this before? And going through it now, I am so glad because I just have more options. I have more control over my own business and what I can do. But more so than anything, I am helping my clients more than I've done over my 15-year career. I'm like, I didn't know this was possible, but it is,
I love
and
it.
it's really helping a lot of people. So I'm grateful for that, and I'm excited about it.
I love that. All right, I am going to turn it over to you and let you actually give us your presentation. And so for those of you that are tuned in, and I see we're getting more and more folks tapping in, I want you to go ahead and ask your questions in the chat box, if you will. And we've got Christy Hawkins with us, and she is a brand new person on our leadership team for the Happy House Hunters. We've got Kyle Brandon, he's on the leadership team. We have Michelle Cook, she is in our mastermind. Tammy Teben is in our mastermind, and Tom Chan is on with us. So, so we're getting some folks tapping in, and with that, I'm going to turn it over to you, Fannie, and I'm going to let you do your presentation.
Okay, well, great. I am very honored to be here. I am not sure the experience level of everybody and with their financing. So I kind of just did a summary, but I am here to answer any questions that you have. I hope it's not too remedial, but it's just a summary, and then we can go into depth on any questions that you may have. Just kind of giving you an idea of the different financings out there. What I found, and Kathy, like you said, you have the different F's. You have to know what you're going to do before you can kind of really seek your financing, correct? Because it's
Correct.
all these financing options out there, and you got to find it. And then once you find it, you got to figure out what you're going to do with it. Whether you're, you can have all these options, but if you don't know where you're going to go, your head will just be spinning, and you have a lot of options available, but nowhere to go, right?
Right,
So,
right.
but these are just the options. Can you guys see this? Can
Yes,
you see
tell us
that?
in the chat if you can, if everyone can see her screen.
Okay.
Can you guys
Okay,
see?
so in the
Yes, they can see your
they see
screen.
my picture, but
Yep,
I'm yeah.
yep. They see that you're sharing your screen. So now you just need to switch from your picture over to your presentation, because you're actually sharing your screen now. And so you need to go, you
Need
might
to
have
switch
to,
it.
you
Okay,
might have
hold
to
on. Switch
minimize
screen.
your screen so you can see your tabs.
Okay.
Yeah, there, I see your little cursor up there. Can you see your tabs? Can you click on a tab?
Can you see this?
No, I just see your little cursor there at the top. Yeah, you'll have to minimize
Yeah.
the one with your picture on it so you can get to your presentation.
Can you see this?
We still see your picture.
Um,
You can unshare your screen and reshare again.
yeah.
If you reshare your
Yeah.
screen again, you can then pull up the presentation that you're looking for.
Just a minute. Did I do it?
Yeah, perfect.
Okay, great. So there's different type of financing options. You have traditional, like through the bank is traditional and non-traditional financing, banks, credit unions, savings and loans. And then you have the private money lending. A lot of people call those the hard money lenders, but they're basically private money lending. And then you can raise your own capital. So, you can go to family and friends and you can say, hey, I got this big adventure. If you invest so much money with me, I'll give you a return on your capital. That's probably the cheapest way. If you have people that have money, that's probably the best way to go. But if not, then you have all of these other options that they do call. With the financial institutions, the conventional loan options, LTV is your loan to value. And you got the single family units, they'll lend you up to like 85%, and that's like 15% down. So if it's $100,000, you have to have 15,000 down. The more units you have, though, the more money they want you to put down. And these are at just regular bank conventional full documents. They want to look at everything, your income, assets. You have to qualify for that. So you have to qualify for all the debt you have and any rental property that you're going to hold. You have to qualify for that. And then also too, if you already own a home, you can get a a home equity line of credit, and then you can use that to purchase rental property. And they just vary. It's a combined loan to value. So if you already have a mortgage on your current home, and then you can get additional money, but the combined loan to value can't go over 80 to 90%. It just depends on the institution that you go to. So this is just straight, no creativity, 1 unit, 15% down, 2 units, 25% down, or you can get an equity line of credit, it's like a credit card, and you can, have access to that money to purchase. And also too, at some banking institutions and some lending options that I have available to me are non-traditional conventional loan options. If you have like a large portfolio, let's say for instance, maybe in your you had maybe 500,000 or 700,000, maybe you were retired. You had a large asset portfolio and you didn't have income coming in, but you had a large asset portfolio. We can use your asset to qualify you. Now, we wouldn't need income or anything like that, would just be your assets, and that would be it. We have a bank statement program for those self-employed people that write off everything on their taxes, as opposed to using your tax statement income, or what's on your taxes. You can give us 12 or 24 months of bank statements, and then we can use your income that's reported through your bank statements. We have a 1099 program. So if you're self-employed and you get paid 1099, that's another way of documenting your income. And then another way that I've been doing a lot of these lately, it's investor cash flow. So they don't use any of your income. They use the property rental income for qualifying. So you don't have to provide them tax returns, pay stubs, or anything like that. The only thing that you have to make sure you have, with all of these programs, they at least want 20% down. And the minimum credit score is about a 620. But they're not looking at any income at all or debt ratio. So if you're a person, if you're self-employed, you don't claim a lot of income, or you're an investor that's just getting started and maybe took some money out of your 401k and you said, hey, I want to start with maybe doing some rental income, maybe some of these programs you may want to kind of look at. So it is options out there, if you're looking to kind of like hold and do rental income or build up that kind of portfolio.
Now, Fannie, how long do you have to be collecting the rents before you can count the rents toward the investor cash flow?
Oh, it's you don't even have to have a tenant in there. You can purchase a property, and we're using the proposed rent, and it's basically based on what the appraisal comes back. So if the appraiser, he would do appraisal and he would get the rents in the area, and that is, if it's not rented out, that's the rent that we would use. What he's saying is in that area. So if the rental income is $1,500, then that's what we would use to qualify you, and that would be it.
And that's if you don't even have it rehabbed and rented yet. It's just what the proposed rents are going to be once you get it rented.
Correct.
I love it. I love it. All right. Okay. I see who's on the call. Make sure you keep Fannie's number.
Okay. And then the hard money or the private lenders, they the loan to value is 70 to 75% of your after repair value. And this varies between lenders. They have different credit score requirements. Some of them now, and it's like some of them, it's 70 to 75% after your repair value, and it's 100%. But some of them, they have different requirements. It's 100%, but you have to pay 10% of your repair value. So it just depends on which lender you choose. And all of them have, some of them have 1 point, some of them have 5 points, right?
Okay.
Points are what they charge you to do the loan. So just like any kind of financial institution, they're in the business to make money. And the lower your credit score, they say it's some lenders out there, some private lenders out there, they say credit score doesn't matter. but credit score really does, because they use that to kind of determine what your interest rate is. Because if you have a lower interest rate and not a lot of reserves, they're going to charge you a higher rate, because the risk is high for them. You know,
Okay.
if you're not, if you, it's called skin in the game. If you don't have a lot of skin in the game, it's easy for you to walk away. What is your risk? They have more risk in the game than you do. So if they give you this money for the repairs and then it goes south and you don't have anything invested, you can walk away, but they still have to get this asset fixed up or resold. So, it sounds good, but you have the everything is always in the detail, and that's kind of really important. Okay, and then we can dive into additional questions. This was kind of just like a summary. And then the last option I was raise your own capital. If you could do it, that's that's probably the best option. Because it doesn't cost you as much, but a lot of us can't. That's why all of these other financial options are available to you. So what questions do you guys have?
Okay, gosh, that was a lot of great information. I think my big aha moment was knowing that on that one qualification there, that you're looking at the projected rents, and it's not like, well, you have to have this property already rehabbed and rented for 2 years, like they do with self-employment income, where
Oh
they're
yeah.
like, we want to see it 2 years on your tax return and that sort of thing. And so I think what's happening when I look at the folks that are on the call is, they've taken their cash and bought their first unit, and then they've borrowed some money on either a home equity or whatever, and they've bought a second or a third. And so now they're getting to where, like, I want to buy more, but I don't have any more of my own cash, my own
Mhm.
cash, either my own equity. And so now I'm going to have to borrow some.
Mhm.
And so now, the big thing is, over the years as well, you have to have the credit score, you have to have the debt ratio, you have to have the collateral, you have to have all those things. And I think there's some ways to do some financing, where you can finance around some of those things. And so anyway, anybody else have any questions out there? I see we've got some folks that are very active in the business, even though we're all still considered kind of newbies. They've got a few, properties under their belt. So go back to that screen, if you will, Fannie, the one that where we were talking about uh, the rents.
Okay. Did I stop sharing?
Yes, it stopped.
Okay, I'm sorry.
All right. So those of you that are out there, put some questions in the chat box for Fannie, and get some real life situations, some situations that you're in right now or that you're looking at, and how you might want to finance those. Fannie's looking for her screen.
I should. Okay, I think I got it. Did I do it?
Yeah, you're in this, you're there, but
Am I sharing?
you are sharing, yes. And your screen shows investor financing options, but it doesn't show the options. It just has the title of options.
Is it this one? I thought I was sharing. Yeah, I gotta learn how to work.
I get it. I understand. I understand. Yes, that's the one right there. So the non-traditional loan options. What if, and we've got a couple of questions coming in, but what if I wanted to finance a commercial space or, you know, like it has like some storefronts on the bottom and maybe some lofts or units on the top. Is that something that I could get financed under a non-traditional conventional loan option?
Those are commercial. Those are commercial. That would be a commercial product that
Okay.
that would be out of my wheelhouse, to be
Okay.
honest with you.
Okay. Kyle wants to know, do you have any resources or suggestions for finding hard money or private money lenders?
Yeah, I can send you, Kathy, I can send you a list of them. And you can
Okay.
share
Okay.
with your group.
So you have some of those in your back pocket.
I do.
Okay. Okay. Good to know. Good to know. Kyle is on our leadership team and he is a licensed realtor. And so he is always running into investors that might need to be a little creative and look for some hard money or private money lenders. Tammy wants to know, she said, we just met with a lender this week and learned about the non-traditional financing using rents. She said, we'll be doing that for our next property. So yes, I love that. Now, if you're using the non-traditional financing using rents, what would Tammy have to show up with to get her loan approved? Does she still have to have the credit score, the debt ratios? Does all of that still apply? And they're just using the cash flow of the rents to qualify her? What else does she have to do to qualify?
The minimum credit score, I believe, is just like a 620. And then that's it. As long as the property, as long as the rent covers the mortgage, that's it. And you have your down payment and reserves. It's the easiest qualifying loan that you can do if you have the reserves and the credit score.
Now, is
It
the
really
interest
is.
is the interest a little higher?
Like right now, if the lower your credit score, absolutely, if you're in the low sixes, I mean, but rates are right around in the 6%. So it just depends on, yep, you're in the sixes. Still not
Okay.
bad for an investment property.
No, that's not bad at all. When, you
Mm-mm.
know, even using my own money, before interest rates really, the bottom dropped out of them, you know, here recently, of course, but even when I was using a traditional type loan, I was in the 5%,
Mhm,
and
mhm.
I still
Yeah,
have some mortgages in the 5%.
well, that's what I was going to say. I just did one. I just closed on one a few weeks ago, and they got a duplex, and it was more beneficial for them to do the rental income than to go the conventional route because I think they would have had to put down 25% as opposed to 20% down, and the rate would have been a little about the same, but they would have had to pay more point. They would have had to pay a whole bunch of points. On this one, they didn't. The rate was, I think it was like mid sixes, and it was less qualifying. I didn't have to worry about getting tax returns or anything of that nature. The property qualified, and it was
Wow,
pretty good to go.
that's amazing. I love it. I love it. Tom wants to know, are the non-traditional conventional loan options only available through a broker, or are there different types of brokers?
It's different type of lending institutions. Not all lending, not just brokers, but not all like your traditional banks. I don't think they they do the non-traditional financing. To be honest with you, you may want to try some. Brokers are good to go through. I'm not going to say that I'm biased, but they are because they
Okay.
can, we can shop around for you a little bit more. Your traditional Chase, I don't Chase or Huntington, I haven't seen them do the non-traditional financing.
Okay. So as a broker, you can do the traditional and the non-traditional. Am I correct?
Yes, yes, absolutely.
Okay. Okay. Now since you started your own mortgage, and so now what I need to say is you've started your own mortgage brokerage. Is that
Brokerage.
correct?
Yes, ma'am.
Okay, okay, so you've started your own mortgage brokerage. And so how do we connect with you if we want to take a look at some of your products and we've got some things going out there and we want to close on them? How can we connect with you?
Oh, definitely. You can go to my website, www.optusinc.com, or my direct number is 614-552-9787. And my email is Fannie Mae West at optusinc.com.
So your website is Optus, it's OPT.
ISTINC.com.
Okay, I'm going to put that in the chat. Make sure I have that right. Is that right?
Yes. Mhm.
Okay. And then your phone number again?
614. Oh, no, you want me to type it? Can I type it?
Oh, you can if you want. I just want to make sure that everyone on the call can connect with her because, okay, she corrected that. I had an extra E in there. So use hers where she says, you can see it's from Fannie Mae West and it's OPTISTINC. I had an extra E in there. And then her phone number. And so for those of you that are on the call, you can do a screenshot, you can write it down, or you can click the three little dots right there where you would type a message. And if you click those three little dots, it will let you actually save the chat. There's a little option there to save the chat. So however you want to do that, screen print, write it down, or save the chat. But definitely, I'm going to date myself here. Definitely keep Fannie Mae in your Rolodex. How many of you have a Rolodex? I know we all do everything in our cell phones these days instead of having the old-fashioned Rolodex. But let me show you. I still have an old-fashioned Rolodex. Check that out. I still have one. So anyway. And I keep track of a lot of things in my little Rolodex. It's actually for the folks that aren't as computer savvy in my office. They can still find stuff. So. Kyle says Rolodex is the name of his Excel file with all of his addresses. I love that. I love that. Love that. Okay. Now, any other real deals that are going out there that you have some questions for Fannie? Do you have anything that you're really looking at that's on the table that you would like to talk to her about? One of the things I think that I would be concerned about is if I had no cash or very little cash and I wanted to get started in an investment property and I went with, say, a non-traditional, even though I might pay a hint higher on the interest rates. How can I borrow not only to buy the house, but also can I borrow enough to do the rehab? Is that a possibility?
On the non-traditional route, I know it's a Fannie Mae home style, and I think you only have to put down 10% on that one as opposed to 25%. The other option would be, the kind of like the private money, the hard money, but that limits you. So if you have if you have a property, let's say it's worth that after repair value is 100,000, right?
Right.
The maximum amount that you would be able to get a loan for would be 75,000. So you would have to be able to get the rehab done and purchase the property all for $75,000. So that would be.
But you could borrow the amount there. You could borrow this out of the 100,000. You could borrow the 75% or the 75,000, and you wouldn't necessarily be buying the property for that. You could buy it, say, for 50. And have 25,000 for your rehab, but you could borrow the full 75. Am I hearing that correctly?
You're hearing that absolutely correctly.
Okay. And you can base that on the rents at the other end.
No, that would be hard money.
Okay.
So that would get you into the property to kind of like and that's a good strategy. You can do it. You can refinance into the investor cash flow too. So that could be an option for you.
So once
Like
it's rehabbed is when we would then maybe do an investor cash flow
type deal, yes,
type deal. Okay.
because it has to be um, livable.
Okay.
Mhm.
So it has to be ready to go before we can base the rents, because again, they're calculating that you're going to get rents right away, and that's how they're qualifying you for the loan.
Correct, because they're not looking at any other income at all.
Okay. Okay.
So
Okay.
if you want to do that and you have limited cash, that may be an option for you
Okay.
to, use the hard money to get in with limited cash if your numbers work out, and then, you have equity there so you can refinance with the investor cash flow. So that's another option.
Okay.
It's so it's different options to kind of, it's just all kind of, Kathy, it depends on your situation and how much funds you have. And then looking at the different strategies that's out there, to see which one that work and that you can put together to work for you.
Now, when you're talking about the bank statement, the non-traditional bank statement, I'm assuming, because when you file a rental property on the Schedule E, of course, you're putting 100% of the rents at the top of the Schedule E, and then you're subtracting out, your property taxes, mortgage if you have one, your insurance cost, that sort of thing, and then, of course, the bottom line then is your rental income. But because investors oftentimes deduct a lot of things, especially if it's the property in its first couple of years, where there may be still, updating roofs and furnaces and windows and all that sort of thing. Is the bank statement when they're just looking at the gross rents, or how does that work, that they're not looking at the bottom line like you necessarily would on your Schedule E, which would be on your tax return, of course? How
Correct.
is it helpful to look at the bank statement? What is it that they're not considering there?
They're not considering anything that's on your taxes that you take off, all those things that you write off. They're strictly looking at all your deposits and calculating your income based on your deposits,
Okay.
not using, all your deductions, because as
Okay.
self-employed people, we're going to write off as much as we can, how we can, when we can. Sometimes stuff we shouldn't, but we do, right?
Yeah. Now on that one, is the interest a little higher or no?
Yeah, the interest, all of these interests, they're kind of pretty much right in the 6%. Like right now,
Okay.
rates are really great. They're traditional, like any investor product, whether it was, they're still going to be higher than owner occupant rates. So
Right. Right.
compared to the investor products, no, they're kind of like maybe I say a point higher at the most. Um, mhm. So we're still in the fives and sixes for these.
Okay. Now,
We're
can
not
I?
looking at 10% rates
Right.
or
Right. Right.
anything
Right. Now, for some of you, I'm a little older than maybe most of the people on this call. I know I'm older than all the ones that I know personally, and I remember when I bought my first house, it was at 14%, and we thought that was
Mhm,
amazingly good
mhm,
because
mhm.
rates had gone into the double digits, and I got it at a low interest rate of 14%, and I was so excited for that. And I remember those days. So now when we're getting stuff at, 2.99, I'm like, oh my gosh, that's like free money.
Yes,
And
that's what I'm
so
saying.
and
Mhm,
so a 5 or 6% is that's what I was doing, just a couple of years ago. And
mhm,
so that's not a bad percentage at all. Now,
mhm.
how about if we want to invest in something out of state? Let's say we want to invest in a property that we want to use for, well, like for example, I just bought a condo in Florida, and I would love
Mhm,
to buy a second one down there and
mhm.
use it for a rental for snowbirds, and because the rents are a little higher than renting it long term. Um, could I purchase something like that with a non-traditional, conventional loan option?
Yes, absolutely. Mhm,
Okay.
absolutely.
And so that one, it sounds like maybe, a bank statement or an
Like
asset
a rent,
qualifier or an investor cash flow. Maybe, some of those products would work if you're looking to purchase something like that.
That's what I was about to say. If you're going to use it as rental, I think the investor cash flow may work. Mhm.
Okay. Now, again, on a short-term rental like that, the rents are pretty good, but oftentimes, a snowbird just wants it. They don't want it through the summer months down there because it's too hot. So they just want to rent it like January to April or something. And, but usually the rents are pretty high. So my guess is, the lender is just going to look at the overall expenses versus income. Am I correct? They're not going to pay too much attention as to what time of year you're renting it out, or my guess is they're going to say what is your projected cash flow for the year, and it wouldn't matter what time of year you actually receive that.
Right. They're going to look at, okay, if you want to use the investor cash flow per se, they're going to say, well, this unit can rent for this amount. Um, you know, even if you don't have a lease just yet, because you don't have to, they're going to look at the appraiser said this can rent for, let's say, $1,000 a month. That's what they're going to utilize to qualify.
Okay.
Mhm.
Okay. Perfect. I get it. I get it. Now I'm excited, Fannie. I'm ready to go shopping. Is anybody else ready to go shopping? Tammy says, thanks for all the information. I love that. And we've got Fannie's contact information. We have her website. We have her email address and also her phone number. So, keep that. Make sure that you get all of that information down. And is there any other questions at this time? We still have Christy, Kyle, Tammy, and Tom. Michelle had to jump off, but we still have Christy, Kyle, Tammy, and Tom on. So is there any questions for Fannie? I've got a quiet group tonight, Fannie.
Mhm.
All right, I've got your contact information here. I will put it out with the replay. Kyle said he's learned some new stuff. Yes, Kyle, this is going to be good for you, for your clients when you're trying to qualify some clients. This gives you some options. Yes, I
Yeah,
really like that.
I think the investor cash flow has really been picking up at this point. And then for people getting into this market, taking advantage of the rental market and building up their portfolio. And then with the bank statement program for those people who have been writing off everything, that's really a good program because,
Well,
you know,
I have a girlfriend who she's just rehabbed several of her properties, so she has some high expenses
mhm,
just this past year because she's done a lot of major rehabs to these new properties. But it's things that she's not going to do every year. She's not going to put a new roof on every year or put in a new
mhm,
furnace every year, and so
mhm,
she now can't buy anything traditionally because they're like, well, no, we need your tax returns, and it shows that she did these huge repairs that she's not going to have from here forward. So this would be the bank statement would be perfect for her.
mhm.
Tom says, how far ahead do we need to get pre-qualified for a loan?
Um, I would say I always tell everybody, 6 months. That's usually my rule of thumb because that
Okay.
just gives you, if there's anything that you need to work on, if you need to build up some assets, at least you know where you are. And then, go from there. I usually use 6 months
Okay.
as a rule of thumb.
Okay. So if you're going to qualify under the asset qualifier, it's basically considering your assets versus your liabilities. They're just looking at see how solvent you are, is my guess. Am I right on that?
Mm-hmm. Yeah.
Okay. And then the bank statement is your gross rents coming in that, like my girlfriend who's done some major repairs that she's not going to have all the time. And then the investor cash flow is the rents for the property that you're looking at purchasing. So that's great. Tom says he's not in the local area. So how does he select a mortgage broker? Where are you physically located, Fannie? Are you
I'm located in Ohio in the Columbus area.
okay?
Um, but my office is in Easton, but I'm virtual as well. So you can go online and if you want to do the application there. If you're not local, are you um, in another state?
Yeah, Tom, where is it that you're located? And does it matter where your clients are located? Can you do mortgage lending across state lines, or are you licensed or whatever in a certain area? I'm not, and I have to admit, I'm not sure how that works.
No, with the investor products, I can do a lot of investor products all over the state.
Can you do it in other states?
Yes, in other states. Mhm.
Okay, okay. Tom said he is in Maryland, but he wants to buy in West Virginia.
Oh, yeah, with investment properties, yeah, I have a national lender
And
that
okay,
I work with that I can
perfect,
do
perfect.
investment loans to. Mhm.
Okay, so if I wanted to buy a second condo in Florida, I could work with you.
Absolutely.
Okay. All right. Okay, I'm getting excited now. Tom, I know you're going shopping. Oh, goodness. That's fun. That's fun. Tom, do you have something already picked out in West Virginia? Put in the chat box. Are you already looking in a particular area in West Virginia? Tom says he'd like to get pre-qualified.
Okay, good.
So Tom, make sure that you jot down everything. Give us a yes if you have Fannie's contact information. If not, you can scroll back, but I want to make sure you have that. So Tom, give us a yes if you have her all of her contact info, so we know. He says yes. Yep. And he's looking. He says, I'm looking like you told me to. Yes. Okay. Perfect. 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 I love it. I love it. And Kyle, he says, contact me, Tom. Oh, Tom, contact me so I can get you linked up with a great local agent. Yes. Tammy said, I heard when using investor cash flow, lenders like to see at least 12 months of experience as an investor with the rental income. Is that always the case?
No, they do want you to have a primary residence though.
Okay.
So that is a caveat. You do need to own a home. Like, you gotta at least own one home. So usually, as long as you have your primary residence, then you're fine. And
Now,
that's pretty much, and you don't have to have, the lenders that I'm working with, you don't have to have experience, but you do have to own your own home. That's kind of like a, a condition for, yeah. Mhm.
okay. Well, I know Tammy personally, and she does own her own home. As a matter of fact, she's been investing not very long, though. She doesn't have a lot of experience over the years, but she has been investing, and she did mention earlier in the chat that she was just now looking for a loan like that. So definitely worth a look, Tammy, to maybe get some numbers from Fannie and compare them even with the person that you've contacted recently, and do a little comparison. And it's always worth a look to see how you can, use your money to your best advantage. Because I'm right there with you. I want to make sure if I'm going to sign on the dotted line that it's going to be something that's going to work out for me financially. So I love that. Okay, and Tom, don't forget, get in touch with Kyle. He can link you up with a great local agent. Unless you already have, Tom, you may already have someone that's looking for properties for you. But it sounds like with the information that Fannie has given us, that all of us can go forward with our next purchase. Tom says no, he doesn't have an agent. Okay, so Kyle and Tom get together there so that you can look at some great properties and then get a hold of Fannie and get some financing, and you'll be well on your way. I see we have Christy. I haven't heard from Christy. She's on the call. I just met with Christy earlier today. She hasn't put any questions in there. She's kind of looking. We were looking at properties today online. And there's still some deals out there, folks, if you haven't been looking. And I know Kyle can help you with that, but there are definitely some deals. Christy and I, we had our chins on the table more than once today. Christy said she's taking it all in. We had our chins on the table more than once today when we saw that that in some of these outlying little communities, there's some great options out there for investment properties. And if you think you're out of money, boy, after talking with Fannie, you're not out of money. There's all kinds of ways. And again, it's so hard that, once you start to get some buildings, properties under your belt, to go that traditional route, because they're still doing it old school. They want to see the credit score, the debt ratio, how many credit cards do you have, what is your income. I mean, and you're doing all of this documentation, and it's a good deal, but you can't get the money quick enough to get the deal. So these are some perfect options. I'm loving that investor cash flow, Fannie. I'm really loving that one. So anyway, it's lit a fire under me. I'm ready to start looking again, because I do want to buy another piece of real estate. And so now that I feel like I have some additional options there, I'm loving it. So any other questions for Fannie? Okay. Fannie, do you have any closing comments that you would like to make? We've got about 10 minutes still. Is there anything else that you want to share?
No, I just appreciate being a part of this meeting, and I'm glad I was able to answer any questions. Like you said, Kathy, when I think the investor cash flow just opens up the door to a lot of people, especially the self-employed realm, or people
Yes.
who, want to get into that, but in the debt ratio, because maybe they can't show that income. You don't even have to worry about any of that at all. And you can start, building up your retirement portfolio. So I really thought, when I saw that, I was like, oh, that's a great option, especially if you're looking to build up your rental portfolio.
Yes,
So
yes,
I
I
would
agree.
definitely say.
I agree. I think it's a
Mhm.
great option. And again, what happens, and I can speak from experience, and also for a couple of folks that are on this call, what happens is, you buy the real estate, and then, you don't, if these properties have been sitting vacant for a while, you don't know what needs to be fixed. It looks good, and you buy it and you think it's going to be good. And then, you get some renters in there, and next thing you know, they're like, hey, I think my drains are backing up. Well, people haven't lived there for several months, and so nobody knew the drains were backing up. Well, now you've got this big expense that comes out of your account. Or they say my roof is leaking, or the furnace doesn't. Tammy says, "Amen, sister." Or the furnace doesn't work, or the air conditioner doesn't work, and all of a sudden you've got somewhat expensive repairs, which is fine, because you're going to keep the property long term. It's a buy and hold, and you know that you're not going to have those expenses again next year because you did them all this year. But all of a sudden it wipes out your debt ratio, it wipes out your cash, and then you see a great deal and you can't go forward, even though you know that in the next year or so that property is going to be cash flowing great. But a lot of the traditional lenders, they're like, well, come back once it's cash flowing great for 2 years, then we'll talk to you after you have 2 years of tax returns showing your profit margin. And so that's been the problem. And so this is great information. So yes, I'm like Kyle, I've learned a lot. This is wonderful. And I'm very excited to have this recording and put it in our list of recordings. And so for those of you that are on the call, if you go to Kathy Benner International Academy at teachable.com, you will see that we have all of our free meetup replays there. And Fannie, I will send you a copy of that link as well. But we have all of our replays there, and this actual recording is going to be in our free meetup replays. So you can go back and check it out if you want, and pass the information on. So this is great info. With that, we are just about just a few minutes before 7. And I just want to say thank you, everyone. Tammy says that thanks so much for all the information, Fannie Mae. She says we'll definitely be reaching out to you soon. And Fannie, I think I will be reaching out to you as well. This has been wonderful for all of us. I am going to put in the chat box, see if I can spell it. I always have trouble with my fingers when I'm trying to type. Okay, .teachable.com. So it's Kathy Benner International Academy teachable.com, and that's where you will find all of the free meetups and all of those recordings. And it'll just say Happy House Hunters free meetup. So it's real easy to find once you go to the Academy. Okay. With that, if there's any last questions or last comments, I want to thank Fannie Mae for being on with us and preparing this presentation. Again, I've learned a lot, and I want to thank Christy and Kyle and Tammy and Tom, and Michelle was on earlier and had to jump off. So thank you guys for coming on, and stay in touch with everyone. And thank you so much, and we will see you soon.
Thank you for having me. I appreciate it.
All right. Thank you guys. We'll see you later.